Good morning, everyone. This is Arash Adnani from PrivatePlacements.com. It's Friday, March 20th, 7:44 a.m. right now in Vancouver. I have a special guest with me, Mr. Frank Curzio, founder and CEO of Curzio Research, providing individual investors stock analysis and really guidance for over 25 years. Frank, thanks for joining me.
Thanks for having me on, buddy. Thanks for having me on. I appreciate it.
So, Frank, I got to say, you've been really ahead of the curve on coronavirus and its effects on the markets for a long time now. You've been advising your subscribers and your followers for, months on what they should be doing. Tell me at what point did you get dialed in, and did this thing get your attention? Let's just start there. What got your attention from the get-go?
This was in January. So, I was following the coronavirus a lot in mid-January, even early January, just seeing it spread throughout Wuhan. And I have some good contacts from my Wall Street Unplugged podcast, which I've been doing for 12 years, but it's global. So I get emails from everybody. Since I've been doing it for such a long time, I get lots of downloads. And to me, the writing was on the wall, because I think people forgot how it is to trade at a value market, because we've been in the growth market for so long since the credit crisis. And we were trading in the U.S. at 19 times forward earnings. That's a huge growth multiple, and we deserve that growth multiple. That was okay, pre-coronavirus. So we had low interest rates. We have earnings surging. Balance sheets were really, really strong. We're heading into election year. Just favorable monetary policy, favorable administration, who's his gauge on how the economy is doing is basically what the S&P is doing. So we deserve that premium. Now the coronavirus kicked in, and I'm watching it spread, and pretty much at the end of January, that's when I started getting worried, because people weren't familiar with how big of an economy China was. People can say, wow, it's really big, but it accounted for 40% of the global growth in 2019, according to the IMF, 40%. So basically, China's the world's growth engine, and we're trading at a huge growth multiple. And they started shutting down provinces one by one. And you basically had 500 million people on lockdown. Can't go anywhere, can't go out of their houses, can't do anything. So the whole supply chain shut down. And even our company started warning the first week in February, and even into the second week in February, because this thing happened like the third week, it started to fall. So it was around the first week of February, I was telling my clients, I said, look, you got to take profits right now. We could see an imminent market crash. This is something that could disrupt the world. And if it does, there's a good shot a lot of economies are going to go into recession. This was just based on China, because you're taking the world's growth engine, who supplies the world, and they're on lockdown, which means what? Which means Apple can't get its phones, which means, for me, I've been following companies all my life and listening to conference calls. Nike's whole growth model is based on China. Starbucks is open all these places in China. McDonald's is open all these places in China. That's their growth model. So we're not even talking about the supply chain. We're talking about all this shutting down, from the supply chain, from the revenue you generate there, and even the growth that you anticipate, which is why we're trading at a high growth multiple. And the risk reward to take money off just made sense, because I was like, listen, if you go to cash, or if you just take profits in some of the stocks that you're up on, look, if I'm wrong and this doesn't turn out to be a big deal, I don't think stocks are going to go up too much further. They'll probably go up a little bit, but if I was right, this market would really come down. I figured it would come down around 15%. So, I sounded alarm. I had all my clients. I sold out of 70% of our portfolios. I told everyone that, look, you got to really, really be careful. And to be honest with you, this isn't a call where, I've never made a crash call in my life in 25 years. I've been very bullish on the market for a long time. And for this call, I wish I was wrong, actually, Arash. People are dying. It's going to result in so many economies shutting down. The effects are not even close to being felt. But, for me, once I saw it spreading outside of China, and I saw Iran and South Korea, Italy, it was just a matter of time before the U.S. was going to get it. We weren't even checking. We didn't even start testing, nothing. So, I knew it was going to fall a lot further. So right now we're down about 30%. And it's a pretty crazy market. I guess everybody wants to know what's going to happen, and what do you want to do going next, right? Or going forward.
Well, that's the next question. Yeah. What do we do going forward? And is this the end, or are things going to get worse? The unemployment rates are supposed to spike in the coming weeks. What are you advising your subscribers, and what are you doing yourself right now?
So if you need to stay in cash right now. Okay. So a lot of times you hear perma bulls and perma bears, meaning that, if people are perma bear and the market goes down 80%, they're going to tell you it's going to go down another 80% from there, right? So they just, that's the way people are. Or you're bullish all the time. If you hit your target, you're going to raise it constantly. So I'm always careful where the market is down 30% and we were ahead of this. So, you always want to be careful and say it's not going to go down further, or, I want to reevaluate. But we have a supply problem, which was in China. Now that supply problem in the US. We have a demand problem, right? Because everything's being shut down. The supply chain model, we could model for supply chain of when it's going to come back on. We can model for demand. We could look out 3 months and say, okay, there's going to be no revenues in the U.S. because all the businesses and everything is closed, and how much cash flow, what's their debt structure. This way we see where the debt payments are, and you could, structure bailouts, which they're doing now, right? So that's what they're doing in the White House. The problem is this isn't about numbers. It's hard for me to say that because I'm a data-driven guy. When I look at the numbers, yes, you could say, okay, that's what Ray Dalio did. He said, $4 trillion, it's easier. The revenue over the next 3 months, say if the economy shut down, it's going to be a lot more than that. Because when you're looking at sentiment, think about September 11th, right, which is the most traumatic event that we compare this to. You're looking at airplanes and the airline industry. 1 week later, they started flying again, right? But it took many, many years for a lot of people to get on a plane. I mean, it took 3, 4, 5 years to be okay. I mean, everyone was scared to get on a plane when that happened. With this too, are people going to run to Disney parks once this ends, or once we see this risk subside? You think people are going to jump on airplanes right away? Do you think
Go to
so?
Italy, for example.
I mean, so a lot of people at the beginning, one of the things that I saw too is you always want to look at the sell side analysts, the Goldman Sachs, the JP Morgans, and where they stand, because that's the consensus. That's what you see on TV when they say, consensus estimates, JP Morgan's going to generate $2 in earnings, and they beat that earnings expectation. That's the consensus estimate of everybody, of all the sell side analysts. They were comparing this to SARS, which is insane, right? So they were all expecting a V-shaped recovery. If you look at the swine flu, it's one bad quarter, one up. You look at MERS, you can go back to, but even SARS, right, had a high death rate. And for me, this wasn't even in the ballpark. I mean, it was comparing apples and oranges. So SARS was in 2002, 2003, and China accounted for 3% of the economy. It accounts for 17% of the world economy based on GDP. You're looking at travel. It was it was around 16 to 17 million people would travel in China then. Now it's like 170 million people in travel in China. So when you look at the comparisons, it's not, I mean, China was such a big component now compared to SARS, but yet everyone was like, oh, it's going to come back really quick. Now your question to get to it, because it's leading up to where we're going here, is what's going to happen. You got to stay in cash. Stay in cash here. There's just, when you see in stocks on our end in the US, Uber's down 15, it's down 50% from its highs. And then it went down another 15% early in the week. The next day it's up 40%, then it's up 15%. That's not a healthy market. Okay, that means there's a lot of algorithms. People don't know what's going on. Now, I brought up just the fundamental outlook, how we can model for this, whatever. It's not about the data, it's about common sense. Our economies are going to completely shut down. Unemployment rate is going to spike tremendously. I don't think this is factored in right now. I don't think people understand. And this is why I'm saying that what we need to do is close stock markets. I know it sounds crazy. I've been doing this for 25 years, right? And people are like, close stock, what are you talking about? You need to close the stock market. It's very, very important, because you can't close the entire economy without closing the stock market. Because when we're home, what are we talking about? We're home with our kids. Everybody's home. The one thing we're seeing and that they put up on every single news site is the stock market. And the stock market, here's what's going to be the news flow over the next 2 months. Maybe it's 45 days, maybe it's 30 days. That's what they're predicting economies. We're going on lockdown, full lockdown pretty soon too. California just announced a full lockdown. So, state by state, we're going to be really locked down. We're going to have no good news. Okay. What could be the possible good news? The vaccine is not coming for at least 6 months. Okay. They're saying they're testing different things. Listen, the vaccines, the most important thing is when you go through the FDA process, it's all about safety. So anyone taking something that's really rushed through this process is absolutely crazy, because it might be good and maybe it could prevent, the coronavirus, but who knows what else could it do to you? So they really have to go through that process. And even the best companies are saying, look, it's not going to be at least 3 months until we start testing. Right. So we're going to have no good news. I know the president went on TV this week and kind of hyped up the idea we have the best biotech companies. It doesn't matter. I mean, the time we get those tests out, the next 2, 3, 4 months is not going to happen. So what else is positive that could happen? Well, we announced more stimulus plans. Every central government already did that. We have interest rates at 0. What are you going to do? They want to give checks to people, right, for $1,000, and it's up $2,400 for families. Why would you give checks to people right now when every single store is closed and we can't use it? We can't spend it. So the reason why you're doing that is to spend it to build the economy. So you're not going to see any spending. You're going to see unemployment rate rise, and industry by industry is going to ask for a bailout. We know the airlines are in trouble. We know the whole travel industry is in trouble. We know that the energy companies under 30, forget it. I mean, the debt payments that these guys are so leveraged. You're looking at retailers. You're looking at just across the board. We look at auto companies. That's what we're going to see over the next 3 weeks. All these companies, they're all going to be asking for a bailout. You're going to see terrible conditions. They're taking out credit revolvers. We have no money left, and the market's going to be open. But these companies aren't going to be generating any revenue because all their stores are closed. You're outside probably about 85% of them, right? I mean, you got the Microsofts, the technology companies, but the news flow is going to be so horrible over the next 30 to 45 days. Remember, it's not about fundamentals right now, because if it was fundamentals, I'm picking away myself and buying some good companies because I know 3 years from now they're going to be higher. With that said, sentiment-wise, you're going to see people who are down 25% in their 401ks and their retirement plans, and they're going to see all this bad news and say, I can't take it anymore. And they're going to completely sell out, and it's going to really crash this market another 15, 20% if they keep it open, which is very, very dangerous. I would shut it. This way, everybody's going to be okay. It's a perfect plan. I know it's difficult. I don't know how they would do that. I know you got to shut all markets, commodity markets, and things like that, and have it coordinated. For me, how do you shut down the entire economy but not shut down the stock market is just beyond belief, because there's not going to be any good news coming, and we could really see this market fall just off of bad news, because there's going to be a lack of good news. I mean, they already threw everything they can at it. They could do more measures and give people money, but at the end of the day, it's going to get a lot worse before it gets better, man.
Has there ever been stock market closure? Like, I remember
September 11th, I think they closed it for a few days.
Yeah.
I'm not smart enough to know how they would do that, but they should. Hopefully, that's on the table. I don't know if it is, because just all these companies remove their guidance. They don't even know what they're doing. Not only that, they don't even know what they're going to generate, which is going to be all losses. But I mean, look at a company like Disney. And people don't realize how bad Disney is right now, where this is a company that highly leverages itself to get into streaming. And everyone's like, streaming, that's great. There's not a company in the world that generated money off of streaming. And it's an industry that has zero pricing power. This is what they're basing their whole model on, Disney, right? So they took out tons of debt. They have $45 billion in net debt. They bought a whole bunch of assets from Fox Entertainment's assets. And they have a $7.5 billion payment in debt this year. Over the next 12 months, they got to make that payment. Now, they were supposed to generate over $5 billion in cash flow. That's kind of gone. Maybe it's $1 billion, maybe it's $2 billion. They say they're going to pay $3 billion for a dividend, which they've been paying. So it's either you got to suspend the dividend, but even the cash on hand, they could probably pay it, but they have no room to do anything else. Now, if you look at Disney, how they generate revenue, well, the parks, all of them are closed. You're looking at movie theaters, all of them are closed. Nobody's going back. So, when you look at their cruise lines, and you could say, well, their streaming service, they have 26 million people. They're not generating money off of it. I mean, if they get 100 million people and charge $5, that's $500 million. That's not even enough to cover the cost for Mulan, which is they're going to have to suspend that movie. So you have no movies coming out. So, when you look at Disney, I think it's a good example that not only are things terrible, but even when they open up, are people going to run and go to Disney parks? No, it takes time to get that out of your system to say, okay, things are okay now. And, for me, when I see this market, you're keeping it open when none of these companies generated revenue. You're going to see tons of bankruptcies. The news flow from all they're doing their job, right? But they're going to be reporting, kids are, the millennials are such idiots. They're on the beaches hanging out, and and then they're going to give it to everybody else.
That video, that's just that Spring Breakers video is so. I mean, it's disappointing. it's
disappointing for you and me and everybody watching this, right? We have credit investors, we have people who are in the markets, but you got to put yourself in that position, right? I mean, these are kids that work their butt off. They got 1 week off to go crazy like we did. When you're that age, you don't care. I mean, it's totally irresponsible, but put yourself in their shoes. Are they going to stop? Probably not. If I was that age, you were crazy. I got nothing to worry about. I don't care. And we're fighting something that you're telling these people that it's not really going to impact you. You're not even going to get hurt from this, but you could carry it for a week without knowing it and give it to somebody else.
Yeah.
I could see why they're doing it. And, again, it's just really crazy right now. And I wish I had better news to report, but we put our people in cash on the sidelines. We had some great reports right now saying, an imminent market crash. Again, I've never called a crash in my career, but I just thought that stocks are incredibly overvalued when you shut off the growth engine. Now that all this has taken place, we have come down 30%, right? So a lot of this is factored in, but just the bad news that is going to come out, and the president's going to have to go on TV every single day. He's probably going to announce a stimulus package every other day. I mean, isn't this better? Think about this plan. You close the economies, you close the stock market, right? Now, nobody's really talking about it. Now you have all these businesses talking to their supply chain, even if you close it for 45 days, right? And you see the corona risk subside. So say if the corona risk subsides, that means it's going to go away pretty soon. The amount of money that's been injected into all these economies, it's like, putting like 10 pounds of steroids into like a small animal. It's just going to go crazy on the plus side. So you have now, when it comes to fiscal policy, when you're about to open the markets, then give everybody checks. When all the stores are going to open. Now, as soon as you open, now everything's positive. You're talking to your supply chains. The stores are going to open. You're going to get deliveries. Now you say, okay, here's the event. Here, you open up the doors. Here, markets open. Everything's going good. And then you give these people checks. It's so much more orderly that way than just you're giving people checks that they can't spend because all the stores are closed. So it's not going to do anything. Even lower interest rates are not going to do anything right now. We started lowering interest rates in 2007, in mid-2007, when they were like over 5%, believe it or not, Fed funds rate. It didn't do nothing for the market until a year and a half later. So that's when we started lowering rates. So it's not going to have the effect right away. And you backstop businesses, you pay all these employees. That's what you use a stimulus on. Because right now, I don't see any other way of how they're not going to close this market. Because if they leave it open, people are just going to get nervous with the news flow and they're going to sell out.
You would think all the money that they're using for stimulus right now could go towards testing kits, ventilators, all these things to actually help solve the issue. But that's besides the point. I got a question for you. So you made a good point about how this isn't about data. It's all about emotions and that
now it is
sentiment. Yeah, right? So what sort of catalyst, let's say like emotional catalyst or example of, could we see or do we need for that sort of turnaround, right? Is it a type of thing where, I know the Olympics, for example, the IOC still hasn't canceled, right?
They still haven't canceled, yeah.
Right? Is it going to take for, let's say, all the sports leagues to say, hey, we're back in business? Or like, what's going to be that movement to get people kind of like...
The movement it's a good question, is if we have a vaccine to the point where if we get it, we'll be okay. I think that's the biggest thing. Think about, like, it's funny where I saw, if we talk about sports, I forgot his name, Michael something, that announced that, he was a football player and that he's gay, right? So that, they commended him for that and said, that's so great. And he just did it a few years ago. And I was like, for me, I was like, that part of our, like, right now where we are in that stage when it comes to events like that, we're used to it, right? We're used to it right now. But think about, and I'm using that event to compare to, think about Magic Johnson when he announced that he had AIDS or HIV. That was incredibly brave, right? Because you thought that you couldn't go like 5 blocks into, near this guy, right? They threw him out of the league. It was like, oh my God. That's where we are kind of with this, with people like, oh my God, corona. You have to, now I wouldn't even know if Magic Johnson came up to me, I'd shake his hand in 2 seconds without even thinking, right? Because, so how do we get from that point where it's maximum, you're scared, oh my God, to, okay, this is cool, I'm not worried about it, that a vaccine, you're seeing these cases come down. We're hoping that it doesn't resurface. I've done a lot of research on the scientific end where, I was saying very early on that even if you look at SARS ended towards the summer because the heat usually kills these type of viruses. It's not a fact. But if you really pull up the chart, Johns Hopkins, which is one of the best companies covering this stuff, if you really look below, like, in Africa, there's not as many cases. In South America, there's not as many cases compared to every place else in the north. And we're going to see, hopefully they're looking at that now, because I live in Florida and it's like 75, 80 degrees, starting to get hot here. I want to see how quick the cases spread here compared to every place else, because that's going to tell us that this is a seasonal thing. That's going to help as well. But we need cases to come down. And that's the $64,000 question. You're asking people, how do you know when the world's going to be okay with this? You know what I mean? It's hard to answer. I'm okay with it. You're okay with it. If I get it, I'm not worried. If you get it, you're not worried because, it really doesn't target us as much. But, my mom just came back from the hospital. She's been in the hospital for a while and she has COPD and diabetes. So if she gets it, chances are she's not going to live. So I think it's going to be different for everyone, but you have to get the confidence back into the market. You have to get, more and more businesses open. And hopefully when you do that, when the risk is subsiding, that's when people I think are going to be a little bit more comfortable, but it's not going to go back to normal right away. And that's a consensus. Like things are horrible. We're not too sure, but it's going to bounce back tremendously right away. It's not. People are not just going to run out and do things and do the things that they used to do because you're locking them down in the houses and everyone's scaring the crap out of them right now, which is rightly so.
Are there any sectors or type of companies that you would look at to keep an eye on? For example, biotech, or even some of the online retailers, or is it just kind of like don't even bother, just cash on the sideline, don't even waste your time?
If you're a mom and pop investor, cash on the sideline. I mean, there's other ways you could do it. Where we have a newsletter called Money Flow Trader, where we're buying puts, which is not they're not going short, so you have unlimited risk. It's a fantastic strategy, and the gains that we're booking are incredible. Gina Terranova is the editor on that. I'm very proud of that. But that's a great product if you're looking for options because you buy options a few months out, and the moves that you're seeing in these stocks when they decline 25% in a day, this is the reason why I created this newsletter. I created like 2 years early because I thought the market, listen, it's the biggest bull market, the longest run bull market ever. We're going to see it pull back. I didn't think it was going to be something like this. But that's one way, buying puts a lot of these companies. You could also, on the long side, buy some of the best companies. Like if you're looking at Microsoft is going to get hit, but not as hard. I mean, people are still going to pay for Office. They have automatic payments. Adobe as well. Some companies are really good. You're looking at Walmart is one of the recommendations I made in February. I think it's near its all-time highs, only because in China, I was following China closely, and they closed all stores except for Walmart's and a couple of other stores to get their supplies. You're looking at Amazon. Amazon's going to be these companies right now. Amazon and Walmart are actually adding hundreds of thousands of employees, which is great. But it's great right now. But what's going to happen if this thing lasts 2 months or 3 months? Because cases are going to explode in the U.S. They're going to explode. We still haven't been testing that much. They're going to explode. I mean, it's going to be. I argued that this is 3 weeks ago. I argued that the U.S. would have more cases than China. Now it seems like that's definitely going to happen. And maybe even a lot more. Some crazy forecasts have them at 10 million, 20 million, whatever. I don't think it's going to be that crazy. But cases are going to explode here. And again, that's going to be something else to add to the negative news cycle. So, when you're asking for biotech companies, I would stay away from biotech companies. I've seen biotech companies. I know all of them. Just so many of them have been covering these sectors and stocks for 25 years. It's very, very volatile. So I've seen stocks go from $2 to $15, and they're trading at $4 right now. I've seen just the massive moves. Gilead is more of like a safer name, who looks like they, Regeneron's another one. Those are two big names that look like they're going to come up with their with some kind of vaccine first, and then their drugs getting pushed through right away through the FDA. So biotech's really crazy though because there's lots of ups and downs, So mom and pop investors stay on the sideline. It's going to be when you're seeing companies, airlines down 60%, then they'll go up 10%, and then they're down 15% the next day. Yeah, it's not a market for mom and pop investors. Just be in the sideline. Don't worry about missing a 10%, 15% move higher, which is you're still going to be down 30% from your lows. You'd rather have a base and say, okay, now we have no more coronavirus cases. Now I can start picking away. Because even buying the biggest names, I've done that. I've been buying biggest names over the last week and a half, and some of them go down 20%, and then very small positions, like 1/5 positions. JP Morgan's, Goldman Sachs, things like that. Just a couple companies, and it's tough even for me. Like, wow, you're down 15%. Why are you down 15%? And then the next day I'll be up 7%. Then it's down to the 10%. So it's very hard to say start picking away and don't look at the markets or anything for 3 years because you'll be happy. But when you're looking at your stock day by day and that thing's going up, down 20, it's just a really tough market right now. It's very, very, very dangerous.
What sort of, from your subscribers, what sort of questions are you getting? What's kind of top of mind for everyone in the U.S. right now?
It's pretty cool because I'm getting, just the testimonials coming in is the reason why I do this. It's just, we have to be here for our clients. And what, it's just really cool to see that a lot of them, if you listen to my podcast, even in late January, I was really sounding the alarm, Rash. I was just like, look, guys, just listen, I've never called this before. Just, if you don't believe me, I'm a complete idiot. I'm not going to get this right. Just take some profits. I mean, you should be up a lot on a lot of our positions. Even if you bought the S&P 500, you should be up a lot. And a lot of them took that advice, and just to say, Frank, my life savings was in there, and you saved me, and this market's coming down, and that's what I'm getting now. But then it goes to, okay, what do we do? And I'm telling them to follow our Money Flow Trader newsletter, which is really cool. And if you want to start picking away very, very tiny companies, but otherwise be patient and stay in cash. Cash is your friend right now. I know. I mean, it's so funny to see this unfold because people think panicking, they associate panicking with the word selling. So if you sell, you're panicking if you sell. And I'm like, I'm pretty calm. I'm not panicking. I'm just thinking, the market could come down and you should sell some of your stocks because we're up 60, 70%, 100%, a lot of names. Take your profits. If I'm wrong, we could always jump back in, right? So, I'm just looking at the market as a whole, and the advice I'm giving my client, they're all asking, what do we do now? And most of them, I'm telling them, just look, stay on the sidelines, be patient. There's no rush here. Just be patient. There's too much uncertainty. All the companies remove their guidance. Nobody knows what they're going to report. Our economy is totally shut down for the first time in the history of mankind. Okay, this is something that's off the charts. People that are comparing it and using technical levels. I mean, I've watched TV just to see these people and say that the market's going to come down and you should be buying here because when the market declines 15%, and when we go back to history, 1929, it always pops up like 7%. Throw that out the door. Throw the fundamentals out the door. That's what I'm saying. I know the data. I know how much we need. I know who's going to go bankrupt. I know who's going to suspend their dividends. I do all these screens, all this data. Forget about the data. It's the common sense. Nobody's doing anything. Nobody's doing anything. And think about the restaurant owners in your neighborhood, right? Business was booming. Business was fantastic. And you know what? There's some areas, I live in North Florida, where there's no cases. It's business as usual here. I go to restaurants, they have some tables closed and limited the amount of people, but there's people on the beaches, people hanging out. It's like it's not even closed or anything. It's just a different environment here for different places. But when you're using a common sense like these restaurant owners where everything's absolutely fantastic, and it's an area that hasn't been hit, and they're like, you have to close your store. You got to close your store for 2 months. And then you have guys like Mark Cuban coming on and saying, well, we're going to pay our employees. We're going to pay our employees. That's great. Let's see if you pay your employees after 2 weeks. Because if you run a business and you're paying employees, which is your biggest expense, that could be hundreds of thousands of dollars to tens of millions, maybe even 100 million for the bigger companies, and you have no revenue coming in the door, you can't continue to do that, especially when you don't know how the process even works with the government backstopping everything. You don't know when you're going to get your money. Right now, you're sitting there with a business that's draining cash. You're not generating revenue and you're going to pay your employees. How long is that going to last? So they say now, we're going to pay our employees and things are going to be fine. How do you pay employees if you're not going to generate revenue for 2 months? Again, all stuff that's coming in where people are telling you, well, we're close to the bottom. Let me see your data. We're close to the bottom. You got to be kidding me. How do you figure we're close to the bottom? I mean, you could be right on a guess, but for me, I supported my thesis that the market's going to come down with a whole bunch of data of why it was important. But when you have companies that told you, we don't know what we're going to report. Apple came out and they were supposed to generate between 63 and 68 billion next quarter. They came out in like the first week or second week of February and said, we're removing our guidance. They didn't say we're generating 50 billion, 40 billion. They said, we don't know. And there's 27 analysts that have a buy rating on them, on Apple. And the stock is down, probably about 25%, 20% from its highs. Not one of those companies downgraded the stock yet. Not one. Even though Apple totally pulled its numbers and said, we have no idea what we're going to report. So think about that. If you're going to buy something, the companies don't even know what's going on and what's going to happen. So you're basically buying blindly. That's what I'm saying. The big companies are going to survive. The companies that have really good balance sheets, and we listed this in our newsletter, in Curzio Research Advisory newsletter, I had like 10 different screens, over 100 stocks are the ones that I'm looking at to really bounce back. But that's what we're looking at right now. I don't know. I hope I'm wrong on this. When I do the data and I crunch the numbers, I crunched them in January. I figured we'd be here. And now that we're here, I'm always cautious where, if you're bullish on a stock, Arash, and you like it and it goes up 80%, your tendency is to be even more bullish when it's up that high. So I'm very cautious to be like, okay, we saw the downturn, but everything that I look at, the uncertainty, the one thing in the markets that people hate, it's the death of all stocks is uncertainty, and we have more uncertainty today than we ever had in the history of our country.
So this little bit of, let's say, very tentative I don't even want to call it a recovery, but we've had, today's been slightly positive. Yesterday was tentatively positive. Is this just a head fake? I mean, could we look at this and say, okay, listen, these stimulus packages are working, things are going to start to move in the right direction, or forget about it? We're in the dumper for a while.
I think it's just you're looking at incredibly oversold positions. So when you're seeing a market come down like 20%, 15% a day, I mean it's crazy with these. There's a 1,000-point move every single day. I think it's a 5% move. It's the most 5% daily moves we've seen in the history of the market, even dating back before 29, right? Great Depression. So yeah, when I just look at these market conditions and where we're going here. We're going to see bounce backs. I mean, a lot of people who are short cover their positions, right? Which means you got to buy stocks or buy whatever you're shorting. So we're going to see pockets where you see a couple of up days. But yeah, listen, I don't want to sound so crazy because we're going to be okay out of this. And it's going to create not the best buying opportunity since the credit crisis, probably one of the greatest buying opportunities of your lifetime when this is over. We just don't know when it's going to be over. And right now, the consensus was 1 month, right? That's why I was like, it's a V-shaped recovery. It's going to come back right away. Now it's a little bit of a U-shaped recovery. I think it's going to be more of an L. And before I get to that U, and I think, again, they're just assuming that, okay, it's over. Everyone's going to go back and start spending money and go crazy. And people aren't. They're not going to go to as many restaurants. Maybe they want to take out, which is okay, offsets the difference from restaurants. But going to Disney, going to Dave and Buster's, going, just family activities and stuff, you're not going to go on them right away. Are you going to go on a cruise? When's the next time you're going to go on a cruise? I'm not going on a cruise. Are you crazy? If you get on a cruise, one guy gets infected. You're in these countries that won't even let you dock. And then you got to sit in your room.
I was never a big cruise guy to start with, so I'm definitely never going on a cruise.
But seriously, I mean, that whole industry, it's like it's going to take a while to bounce back. And when it does, it's going to be a fantastic buying opportunity. And again, valuation levels, even though they're not reporting, they're not going to report no revenues. I'd say we're close to fairly valued. You can start picking away, but that means nothing. It means nothing. I mean, look at Tesla. Tesla was expensive at 150 and it went to 800. So, we tend to overshoot and then undershoot. So we can come down a lot further. And I don't think we're pricing into sentiment of people being home. And the only thing they're watching is horrible news on TV every day. And they're going to see companies asking for bailouts, companies that they own in their portfolios. And they're all going to, so many people are just going to say, you know what, I'm out of here. I'm selling my 401k because I can't take it. I have no working power. Right? I'm 65. My portfolio is down 25%. Now they're telling me, the market's open. There's nothing going on. These companies are generating no revenue. All these companies are going to ask for a bailout. If I was them, if I was at it, I'm getting out. I got to be in cash. And that's not factored in right now. I think that's where you're going to see another downfall of this, especially over the next month while the whole economy is closed, but they're keeping the stock market open. It's just common sense. It just doesn't make sense.
Okay, Frank. Last question, but it's a three-parter, but we can keep it
back to school. We got one question and 36 parts.
So the three-part, I'm going to give you the three questions. You can hit me in any order you wish.
Okay.
Is there any positive news, or how can we leave this on a positive note? Number one. Number two, can you quickly explain to our viewers about the Curzio Research offerings? Research is different subscriptions that you guys have for your newsletters. And last but not least, being that you're in Florida right now, and Tom Brady has now officially announced that he's joining the Tampa Bay Buccaneers, I'd like to hear your Super Bowl pick if we're going to have a Super Bowl coming up in this next season.
Yeah, I hope there's a Super Bowl in this season. I can't believe they canceled the NCAA tournament. I'm a Kansas Jayhawk fan. They're ranked #1, and that kills me. So, all right, let's go with the most important question first, which is Tom Brady. So, yeah, my Super Bowl prediction. I don't know. Tom, what's great about Tom Brady? He's got an amazing team around him. He really does. I mean, he's got two amazing wide receivers. I mean, they got a decent offensive line. The components are there for him to succeed. So let's see if he does it, and good for him. If he doesn't, it doesn't matter to him, right? I mean, he's going to get paid and he's the greatest ever. But yeah, Kansas City, man, I think they're going to be tough to beat, man. I think Mahomes is going to be around for a long time. Just to see him and how he matured in that one game, I thought he played absolutely horrible and just found a way to win. I know, I'm sorry I'm saying that. I know you're a San Francisco fan.
For KC back-to-back.
Yeah, I think KC. All right. Now, the next question was, all right. So even before we get to the Curzio research part, and this is a positive, it's going to be an amazing buying opportunity. It is going to be an incredible buying opportunity. There are going to be some pockets. There's very small pockets right now. I know a lot of people are saying gold's going to be great. The dollar is going to surge. Europe is going to get hit 10 times harder than us. They have a complete lockdown. They didn't recapitalize their banks like we did. All right, our banks are the strongest they've ever been, which is very important. But when you look at Europe, they're very, very weak. They can't deal with this. Just like China can't. Where you had the Hong Kong protests, they had the trade with the U.S. I mean, they had a lot of negatives going into this before the virus spread. So what is that going to do? I mean, you're going to see a rush into the dollar, which you're seeing now. I mean, you're really starting to see now, and I think that's going to continue. And if that does, that's not going to be really good for gold. So usually you like gold's a safe haven. Gold's a great place to be in since central banks are going crazy. Not right now. I mean, that's why you're seeing a lot of gold stocks come down. The producers are in great shape now. Now they recapitalize and they're actually paying dividends, some of the biggest ones. But be careful with gold stocks. People just think, oh, I can go into gold. That's going to be great. You look at the dollar. That's what you have to look at. Don't look at fear. Don't look at central banks. Don't look at negative real interest rates. I mean, people like to say all these things. If you look back at charts, it's the dollar that really drives it. And when the dollar goes higher, usually gold goes lower. And I think the dollar is going to go higher, at least over the next few months. Again, you're looking for positives. I told you about Walmart. Amazon is really good. I mean, if you're going to go on the biotech side, I'd go with Regeneron. I'd go with there's a tiny company called Inovio. Be very careful. It's extremely volatile. One famous short seller is saying these guys don't know what they're talking about and they're crazy and it's going to go down. But Bill Gates just gave him like $5 million to help develop a vaccine from the Bill Melinda Gates Foundation. So I would say that puts a stamp of credibility on them. You have Gilead as well. But the positive is if you're on the sidelines and you're in cash, we're going to see a really great market. I don't agree that it's going to happen 6 months from now that people are projecting. I think it's going to be more like a year and a half from now. But picking away at really good names with good balance sheets is very, very important because if you're leveraged, I mean, look at the Fords, look at the GEs. These are companies that were coming back. Ford was coming back. So you're looking at these leveraged companies which had a ton of debt, and finally, you're like, oh, they bottomed and they look good now. Throw it out the door. I mean, you're so leveraged, and now you're not generating revenue. Ford's dead, GE's dead. You got to be careful of these leveraged companies and just go with the ones that have really good balance sheets. Microsoft is good. Be very, very careful with Google. I went back and did some research on advertising. Advertising crashed in 2008 during the credit crisis. It's like a secular trend going up forever, right? Especially digital advertising. But companies, and you have a company too, and you know this as well, but they use a percentage of their revenue, and that's how much they spend on marketing. Revenue is going to zero, right? Close to zero. Some of these companies, they're not spending money on marketing; they're preserving cash. So nobody's buying anything because all the stores are closed. So if you're looking at the Comcast, you're looking at Disney again with ESPN. They make $1.5 billion just off the NBA. No live sports, no advertising, right? Very little advertising. So a lot of these markets are going to get hit over the next few months, but the positive is when this thing ends, the amount of fuel that's been, that's going to be put on this fire, it's already being put on this. It's really going to take off because, we have low interest rates. We have, just stimulus. We're going to have backstopping, but, more pain before the positive. And when you're in cash, just wait a few months. Hang out with your family for 3 months. Wait for this thing. Hopefully it's only 3 months, 4 months. And hopefully, it goes well. If that's a positive. And to find all this stuff out, and I appreciate that with Curzio Research, you can go to our CurzioResearch.com page. We have a free report, and our newsletter for Curzio Research Advisory we're charging $49 for the entire year for that one. We have more expensive products, but these are for people who don't know us. See our research. Read it. We've been saying, go on our Twitter account at Frank Curzio, where I do live videos every day for a couple of minutes, but see what we were saying in January and February. And when you see that how to position yourselves, we're starting to get in like a lot of people right now, which is pretty cool. And, again, that's our job. Our job is to try to see these things before they come. And I know when I look at sell-side analysts and all the money that's going into all these mutual funds and the fees that they pay, you're paying these people are managing money to try to avoid situations like this. Because when the market comes down, you lose your money, but you don't lose those fees that you paid them for the last 10 years. So, I think there's going to be a shift when it comes to that a lot of people will caught off guard here. And I don't know how that's going to play out, but it's interesting. It's probably good for guys like us to have newsletters and things like that. But just the whole money management business where you're paying these massive fees for these people to manage. And, if they don't get something like this right, why are you actually using them? Even though it's hard to forecast, but still, even coming down, a lot of these guys, I talked to Merrill Lynch's, the Goldman Sachs and stuff like that. A lot of these guys are still long. So, and their clients are getting hurt right now, which is sad. Be in cash, smart thing to do. And you want to read on any of our reports, you can go to CurzioResearch.com. Again, a lot of stuff we have on this for free, but I'll tell you how to play this market.
Well, at the beginning, you've been right all along on this and really ahead of the curve with everything that's been happening. So in times like this, there's a lot of noise in the market and on Twitter, but highly recommend following Frank and signing up for his newsletter and checking out the research. Frank, thanks for your time. I really want to get you back on here and
whatever.
See how things roll out here.
Mm-hmm.
But I'll let you get to it. I know we got a full day ahead of us, but appreciate your time and talk to you soon.
Thanks, Suresh. I appreciate it. Call me anytime. I'll come back on, man. I love it. Thanks, man.
Thanks, Frank.